stock futures are on the rise, with investors eagerly anticipating the release of critical inflation data. This data could be the deciding factor for the Federal Reserve's next move on interest rates. As we speak, traders are keeping a close eye on the latest Consumer Price Index (CPI) reading, due out at 8:30 a.m. Eastern Time. Economists are predicting a monthly increase of 0.3%, which would bring the annual gain to 2.9%. But here's where it gets interesting. The core CPI, which excludes volatile food and energy prices, is expected to rise even more, at 3.1% year over year. This comes on the heels of an unexpected decline in the Producer Price Index, PPI, which fell 0.1% on a monthly basis. Julian Lafargue, chief market strategist at Barclays Private Bank, believes this PPI signal is hard to ignore. He says, unless CPI delivers a significant upside shock, investors are likely to maintain their dovish outlook. The market has been on a roller coaster ride lately. The S&P 500 just closed at record highs for the second day in a row, thanks in part to Oracle's massive rally. Oracle's shares surged a whopping 36% in a single session, adding an incredible $244 billion to its market cap. This has investors excited about the prospects for the artificial intelligence (AI) trade, with AI-related stocks like Broadcom, AMD, and Micron also rallying. But not all is rosy in the economy. According to Wells Fargo, companies are neither hiring nor firing, which could be a sign of a worsening economic picture. Scott Wren, a strategist at Wells Fargo Investment Institute, writes, "The domestic labor market is, at the very least, slowing noticeably." He goes on to say that initial jobless claims, reported every Thursday morning, have been a reliable leading indicator of employment trends in past cycles. And this is the part most people miss. Even in good economic times, initial jobless claims would frequently exceed 300,000. The current steady level of claims suggests businesses are holding onto their employees, but not necessarily hiring new ones. In other news, after-hours trading saw some movement. Oxford Industries shares rallied 14.7% after beating earnings expectations, but the company's revenue and earnings guidance for the current quarter fell short. Meanwhile, Alibaba's U.S. monthly results. Listed shares dropped 2% after announcing a proposed offering of $3.2 billion in zero-coupon convertible senior notes. So what does all this mean for the markets? Will the upcoming CPI data confirm a dovish outlook, leading to a Fed rate cut? And how will the labor market and corporate hiring trends impact the broader economy? These are the questions on everyone's minds. What are your thoughts? Feel free to share your insights and predictions in the comments below.